What's up everybody, Tom here with another video. Well, it looks like stock market and Wall Street are really attacking us, the retail traders. Hypergrowth stocks, some of our favorites, got beaten down yesterday in the stock market. And it's time for us to now look at not only the news around that, but also the technical analysis levels for the Sp500, NASDAQ, Tesla, Bitcoin, dollar index, and more. Let's try to get to the bottom of this right now. Stay tuned. Alright guys, well as we like to do, let's take a look at the heat map for the S&P 500 to try to find out what happened yesterday and get a little bit of an idea of what might be happening in the future. Well, it was a tech-led sell-off. Semiconductors really got beaten around. We also saw FANG stocks down, and the only things that were safe were the banks and energy sectors. We actually have a look at the major indices. You'll notice it was led as a tech sell-off, 2.87% down on the NASDAQ. The Russell 2000, 1% down, SPX, S&P 500, down 1.3%, and the Dow Jones barely down 0.38. So all things are not equal, like I said yesterday in the video, and it's really just about these particular sectors for now. If we start to see a broader base sell-off, let's say we get under the 3,800 on the S&P, which we'll be taking a look at very, very soon, I could see energy and financials and industrials all moving down as well, and that will lead to a further corrective phase in the markets. Not crash, but corrective phase. XLK, XLY, these two zones, 2.35, 2.52, the two hottest sectors of the last kind of year, now the least hot sectors. And I saw some articles yesterday when we were taking a look at it, and you'll notice that everyone's now on the energy financial bandwagon. That means we're close to that being the end. We're very, very, very close now. When everyone's talking about it, we don't necessarily want to be talking about it. On to the news before the technical analysis and our thoughts on the markets. I just wanted to quickly bring this up because it's pretty much what will always happen in these situations. Melvin Capital, made famous, of course, with the GameStop situation. They actually gained 21.7% throughout the February period. So they've really had a big comeback off that 50% decline they had. And this is just what does happen in the markets. Remember, we can try to stick it to them, but at the end of the day, if they're going to do things like limiting our transactions, not allowing maybe sentiment to throw through, having so many freezes on the stock exchange and other reasons, that's going to hurt us, the retail traders, with sentiment, because collectively we might be strong, but by ourselves, especially if we start to get scared of things, the fear is a very powerful emotion. And that's what they really managed to do. And that's why Melbourne are up. Cathie Wood's high-flying ARK ETF continues to get battered. It's now entered an official bear market, I guess you would say. If you have a look here, look at this decline down to the 125. This is led by all of Cathie Wood's holdings: TDOC, Square, Roku, Zeus, Zillow Group, Tesla. They're all down huge yesterday. And I expect this trend to continue for a little bit if we get through the key S&P 500 and NASDAQ supports. So 20% from the February period. And you can see up here, 156 down to 125. What do you guys think about Cathie Wood? Is this a massive attack on the fact that she's been successful? Or is this just a healthy pullback in hypergrowth stocks that have really pretty much been the best investments in the market? There's not even any doubt. We've got earnings at the moment. We had Snowflake pass earnings. We also had Splunk. I was pretty sure on Splunk being a little bit better than expected. It seems to have been so. They were on a hiring spree, and that was one of the big tellers. Okta doesn't look like the market liked that one after hours. And we have things like Costco still to come, and Slack and some other technology companies. But I think really earnings is pretty much over now. We've seen what we're going to see, and now we're going to leave it to the market to dictate the next locations. So let's get into this technical analysis. VIX to start off with, 26.7 on the VIX, guys. Look at this. Volatility is back, and it's not even near the peak, but we're at the lows. So we started putting test pressure on the 3820. At the time of this recording, we're sitting at a 38.08 on the S&P 500. So starting to pressure that really key support. We get through there, it will be another 100 points most likely based on our technical analysis. We'll get into that very, very shortly. 91 here on the dollar index right now. It closed yesterday at a 90.986. Not strong enough for us to say, yes, the dollar index is bulling. It's just another strong-ish candle. we get through the 91, we close properly, then I could see us moving up onto the Friday to reach around 91.50, 91.60 ahead of non-farm payrolls. And non-farm payrolls will be streaming live on this channel. So if you're liking the content so far, if you've been watching our videos, come join us live. It's a lot of fun, and we'll be doing non-farm payrolls on the Friday before the market. Bitcoin seems to be the only thing that held up yesterday. Bitcoin and other cryptocurrencies having an okay day. That's because the dollar wasn't putting too much pressure on. It was more just the stock market sentiment and hyper-growth tech stocks declining. Bitcoin 50,786 at the time of this recording. Do we see it moving up? Well, we've got some great support structures now behind Bitcoin. We have support structures at the 48. We have support structures at the 50. And once we start moving back through, and I thought we might get that here, if we get through 52,000, that would be a very, very bullish signal and start to lead to the 55,000 kind of area where previous resistance was, maybe even a 58,000. Scrolling into the 4 hours here, notice these long leg dojis. Now, long leg dojis are really indecision candles. If we have two long leg dojis at the same price, and then you get a bullish candle that closes above, let's say the long leg doji, or closes below, that signal there generally takes out the top, because a long leg doji being indecision means that once we get a closed candle either way, what's it telling us, guys? It's telling us we've made a decision. That decision, being able to read the price action early, can give us insights into being able to read a market direction before it even happens. And that's something that I think is quite powerful about these candles. Whether it goes down or it goes up, we don't know. We do know it's at a nice level right now, previous 51,000-ish kind of zone. And if it does go up and a close above this area here with a significant time frame such as the 4 hour, I'm thinking the 55 hopefully does come through. This is up here, 55, bring it up. There it is, previous resistance on that decline scale. So Bitcoin, Ethereum, all other cryptos, all doing quite well right now, and some nice structures across Ethereum, inverse head and shoulders, same with XRP. Silver, on the other hand, looking weak. The trend line is holding barely. It's basically closed below. Yesterday, we put pressure, downward pressure on that bullish pin. We talked about how you need that further confirmation. Never just use one of these candles. Always have that little bit of further confirmation at the top, guys. And the pressure is on. So if we close under here, 25 seems a surety, maybe even 24. And that's just going to be catching up a little bit with the gold move. Remember, gold is getting absolutely destroyed throughout these sessions. Gold now pressing down on 1700. We've got our trend line from previous lows back in March and in May of 19, and gold basically 1680, resistances over here on the left, supports over here on the left as well, and this zone should intersect. I wouldn't just buy this zone. It's all about creating structure, creating lightning bolts, double bottoms, those types of things. When we get to see those, then we know we've found a nice level of support. But this is catching the falling knife, and no one wants to catch the falling knife because you get cut up. And that's something I've done, and I hope you guys don't do it in the future from learning from this channel. Tesla, another one that was moving pretty heavily yesterday. It ended up declining about 4.84% on the day, or $33. It closed underneath, and I repeat that, it closed underneath. Let's look at this on the 4 hour. A very significant buy zone that was occurring. So 661 was where we started to really bounce back up. Then we had 661 again, or 660, and we bought up with a nice wick. This time we've closed with negative sentiment. So just like what happened on the SPX yesterday, the S&P 500, it closed to a new low, which was starting to signal weakness in the market. Remember, the close of the real markets is the most important thing. And when we get a new low like this, it's not only signaling probably going back to these lows here, but maybe a 600 or further. With Tesla, my main concern here, and it's not unknown that this occurs, is that we could be going back for a bigger, further pullback. We've had an amazing run, but do we hit a 200 SMA and go back to the 500? The run was so large that a Fibonacci pullback, to put it in perspective, let me just do this run. Look at this. A 38.2 is around that 600, and a 50 is around the 500. As you would all know, I like this area here when I'm picking up stocks on normal healthy retracements. This is calling for some pretty serious returns. Do you guys think that Tesla can get down here? I'm not sure, but at this stage, nothing's looking positive. And usually for Tesla, all the way through here, it was an incredible positive market. This is the first decline we've seen really since the February into March lows, and even probably before that kind of $1,000 hit the first time before the split. And I'm thinking it could really go to a 38.2 kind of 600 level or a 500 level if the market sentiment continues in the correction. It's going to be pretty fast and pretty quick here. US 500 futures now pressing down on the 3800. We've talked about how important this level of support is. You notice here, we've got support all the way through the futures. Every single part of the trading session is held up. This is the 1 hour chart. So even a 1 hour close underneath 3800 would be significant. It's the real market that's going to dictate to the next move. But we go out to the daily, you'll see straight away the 50 exponential moving average was coming under pressure. We haven't had a close deep enough underneath that because we need that 3800 to get taken out. But then what opens up? We get a 3700, then maybe even a 3600. The fib of the whole thing details around a 38.2 here. So 3600 seems likely, but 3700 is the most likely event as soon as we close underneath 38. Every 100 points matters for the S&P, and the S&P will not drop as much as the tech stocks will. So that means that the NASDAQ will drop the most. NASDAQ actually giving us a decent signal here right now in the futures. 4 hour underneath the 12,677. This is pointing to further weakness here. I would probably take this range, being the range that it was trading in for a couple of days, extrapolate that out and see the number it comes up with, and it's that magical 12,000 zone. This decline, if it does occur, let's say the market, the S&P 500 continues down, 3,700 is probably just going to be here because it's going to be led by tech stocks. If we get a 3,600, I've said it a few times, maybe it's an 11,000, and that might seem crazy, but that's the type of thing that's happening on hypergrowth right now. We're going to have further sell-offs if it gets through these areas. If the bulls can regain control tonight, then we go back into trading the range between the two zones, 13,367 and the 12.8. But for now, it doesn't look like that. It looks really, really, really short from multiple occasions on the markets. SPX, where did it close? 38.20. So we need to close underneath the 3800 on the real market. Don't look to the futures today. Look to the real market. Look to exactly what the real market is doing and then pay attention to that, because at this stage we could just be in a trading range. Comes down, bounces up to the 39, comes down, bounces up to the 39. It's not unheard of. If we go back to 2018, let me just quickly go over here. Here's a range that happened in 19. Notice it looked weak and then it just bounced off. So that can happen. And then if we go back to the 2018 period, see these big ranges. It's not unheard of having a big range. And then once we get that close below, there might even be a little bit bounce, but that led to that flash kind of sell that came through the market. So always pay attention to the past to learn about what might happen in the future. My thoughts are things are looking bearish, but again, 3,800 must be closed against. I wish everybody the best. We won't be live streaming tonight, unfortunately. We'll be back for non-farm payrolls. Thanks so much for the support, guys. See you in the next video. Bye for now.